Well, hello everybody. This is Sunil from London School of Financial Trading, and we are going to be looking at some of the very basics of trading today. Identifying the trends, determining a change of trend, and plotting of trend lines correctly. Now this may sound very basic, but believe me, a lot of traders do create mistakes in plotting trend lines, and it's very important to understand how to plot a trend line properly, because a trend line is the simplest indication of a change of trend. You really don't need anything else. Let's start off with one of the very basics of price action, which is what we call as fractal bars. Now if you notice that we are not using any indicators, we do not use any indicators, we do not need any indicators. Price action by itself gives you enough clues and more. Let's start off with what we call as fractal bars, because fractal bars are the cornerstones of price. They are the places where price generally turns trend from. Let's just zoom this inside a little and let's have a look at this. Now a fractal bar is a group of 3 bars. Let's take this one first. You have a group of 3 bars where the central bar has got a low which is lower than the previous bar and which is lower than the next bar. So it's like a V-shaped formation. Now this is known as a bullish fractal bar. Similarly, a bearish fractal bar would be a group of 3 bars where the central bar is got a high which is higher than the previous bar and higher than the next bar. So this is known as a bearish fractal bar. Now fractal bars become very, very important for the simple reason that whenever price changes trend, it always changes trend on a fractal bar. So if you notice this, you have a bearish fractal over here, you have a change of trend, you had a slight pullback here, once again you had a change of trend right over here. Whenever price changes trend, you will come across a fractal bar. So this by itself becomes a very important milestone, you can call, in price action. If you come across a fractal bar somewhere, you know that there is a possibility of or change of trend, or there is a high probability of a change of trend. So fractal bars become very, very important. If you notice anywhere across any time frames, whenever price makes a major change of trend or even a minor change of trend, it is always on a fractal bar. Now let's take the fractal bars one step further. Let's identify something what we call as swing bars, swing points, or pivot bars. Pivot bars for the simple reason that this is a place where price has pivoted from. Now understanding a trend or looking at a trend, looking at a wave, let's put it very, very simply. The simple fact is that even if a 5-year-old looks at a chart and he says, okay, this looks like it's going up, then it's a trend. If price is range bound, then obviously there's no trend. Now this is a situation where one can say that price is completely range bound. You really don't have a particular trend in it. But here we have an uptrend. This is a downtrend. This again is an uptrend. And how do we determine this? Simple fact is that in a downtrend, you have the fractal lows going lower. Each fractal low is lower, and each fractal high is going lower, which constitutes a downtrend. Similarly, in an uptrend, you have your fractal lows going higher, and you have your fractal highs going higher. Now, that's the reason why fractals become very, very important. So this is a determination of a trend. Let's, as I said, take it one step forward. Now, when I talk about pivot points, can you not just simply look at the price action and say that this is a wave? We can classify this as a wave, a major wave. So these are the points where price has pivoted from. These are the points where price has pivoted from, and these are known as pivot points. Let's call them swing highs and swing lows, or let's call them pivot highs and pivot lows for that matter. And if you notice, these are also fractal bars. They have to be fractal bars. So we are going to be identifying the fractal bars, which are the pivot highs and the pivot lows. Looking at this chart over here, obviously you are looking at, just give me a moment. I don't want a full screen here. I want my tools. So we are going to be looking at, this is a pivot high, this is a pivot low, this is a pivot low, and looking at the current situation right now, we have this as a pivot high. The pivot low is not yet in place. Right now we have a double bottom over here. We're just waiting for price action to confirm. But so far as we are concerned, this is a double bottom. We can consider this to be a pivot low because this pivot or this price is slightly, is it lower? It is slightly lower than the next one. Anyway, this is a moot point. We are going to leave this aside for the time being. So these are pivot points. So pivot points are the beginning and the ends of waves. Within waves, you will find fractal points. Now let's take it on the hard right edge of the chart. Supposing we were somewhere over here. We have an existing downtrend where you have till lows going lower, you have a fractal highs going lower. What you do have is every time price makes a pullback, it continues with the trend. So you have a pullback, you have a pullback, you have a pullback, you have a pullback. At this stage, this is also considered to be a pullback. Now, if the existing downtrend is to continue, obviously price is going to continue with the existing lows. So you would be looking at price to form lower lows, which will be a continuation of the downtrend. That's what we are looking for. What happens is price makes a higher low. Now this becomes a strong indication of a change of trend. Mind you, it's an indication of a change of trend. It is never a confirmation, for the simple reason that you may come across this situation and price can still make a lower low. But when you're trading and you're in an existing downtrend, let's say you're short on a trade and you come across a situation where you have a higher low, it's time to take your profits. It's not a time to go long. Believe me, it's not a time to confirm a long trade, but it's time to close off your profits for your short trade. Now incidentally, this is known as a 1 2 3 formation. So your 1 2 3 formation, very frankly, is what I call as the DNA of price action. 1 2 3. This is a bullish 1 2 3. Any pullback which does not take out the previous low, for that matter, is known as a 1 2 3 formation. Now this is something which we teach in our courses. 1 2 3 is the DNA of price action. It's very important to understand the 1 2 3 pattern. So let's classify this pattern as a 1 2 3. Now what this is doing, this point 3 is establishing your swing point, right? This establishes your pivot low. Let's call this as a pivot low. This establishes your pivot low because this is an indication of a change of trend. A higher low is an indication of a change of trend, and what we have, that price did indeed change trend. So a indication of a change of trend is determined by a higher low, which is a 1 2 3 formation, which is a point 3 of the 1 2 3 formation. Let's take the similar situation when price is in an existing uptrend. If we are trading the hard right edge of the chart, you would consider this to be a retracement as far as we are concerned, because you don't know what's going to happen. Price may still continue with the uptrend and make a higher high. What happens is price makes a lower high. This classifies to be a bearish 1 2 3 formation. So I would take this as a bearish 1 2 3 formation. And your point 3 over here. So this becomes 1 2 3. As I said, the pullback which does not take out the previous high becomes a 1 2 3 formation. Now this point 3 establishes your swing point. This becomes your pivot high, right? So step by step, your pivot points are established by subsequent price action, which is determined by the point 3s. I hope this is clear. Now the pivot points become very, very important for the simple reason is that whenever you plot a trend line or you plot your Fibonacci ratios, they have to be plotted on pivot points. That was the whole point of understanding the fractals or the pivot swing points. Let's take the Fibonacci ratios initially. Now if we are looking at this existing downtrend, right, we came across this particular 1 2 3 formation, which told us that there is a possibility that price is going to change trend and the momentum might shift to the upside. You use the simplest Fibonacci retracements to determine where price can be expected to move to or find resistance. Now this Fibonacci ratio is always plotted on the pivot points. You cannot plot your Fibonacci ratios on the in-between fractals. You can't plot it here, you can't plot it here. So that's the importance of the pivot points. These pivot points become the places from where you plot your Fibonacci ratios from, and let's see what happens. Bingo, price stops exactly at a fib level. Now of course this is the base of the harmonic patterns which we subsequently we run courses on and we conduct workshops on, but that's a different point. Right now we're just looking at the trends, the Fibonacci ratios. Right, so this is a place to plot your Fibonacci ratios. Now let's get down to the main point over here, plotting of your trend lines. Let's establish some ground rules for your trend lines. The first point is your trend lines have to be plotted on pivot points, swing points. They cannot be plotted on an in-between price of fractal bars. So that's the first ground rule. The second ground rule is your trend lines are always to be plotted from left to right. They cannot be plotted from right to left, which obviously everybody does plot it from left to right. Now the reason for going over this pattern is because if I'm looking at this existing downtrend and we are looking for a change of trend, and if I plot my trend line from left to right, obviously I would be plotting it from this swing high towards the downside. Right? I would not plot a trend line from an in-between point, nor would I plot it from right to left from somewhere, let's say from here or there. So they have to be plotted from left to right, plotted on pivots. The third rule, the most important rule of a trend line, is a trend line has to be plotted on fractals. It has to be connecting all the fractal highs in the existing downtrend, and a trend line should never go through the real body of a candle. This is very important. It is allowed to go through the wick of a candle on that particular time frame, but it should never go through the real body of a candle in between the swing points. Now this becomes a very important point. This creates a confusion for a lot of traders. Let's identify. Now let's have a look at this particular trade. We are looking at an existing downtrend. The point 3 here told us that there is a possibility of a change of trend. We started looking for moves to the upside. The strongest confirmation of a change of trend is always on a break of trend line. So we want to plot trend lines starting from this particular wave, this previous down wave. Thumb rule number 1, always plot it from swing points. So we start plotting it from here. That's 1. Thumb rule number 2, we plot it from left to right. So we start from the high. Thumb rule number 3, you plot it on fractals. You connect it on fractals. So you start your trend line here and you connect it on the next fractal. Thumb rule number 4, it should never go through the real body of a candle in between these two swing points. Let's put some lines over here. Right? Now this trend line is a valid trend line because it is not going through any candle in between these 2 points. It's going through a candle over here, but that's subsequent. That's after this point. We are looking behind at the fact when you're trading the hard right edge of the chart. This formation has not yet been formed. These candlesticks have not been formed as yet. Right? So in between these points. Now as an example, can I connect this fractal over here? Is this a valid trend line? It's not. For the simple reason it is going through the real body of the candle. So the most valid trend line is this one. Your trend lines are continuous, they're dynamic in nature. You have to continue your trend lines connecting all the fractals as far as possible till the very last swing point. So you start the next trend line from this one, from where it has ended, and connect the next fractal. Can I connect to this fractal? Again, no, because it's going through the real body of a candle. So I connect it here. I get the second trend line. Can I plot a third trend line? Let's see. I take this and I connect to this fractal. Yes, I can plot a third trend line. So I get 3 trend lines over here. Can I plot a 4th trend line? Not really. From here, I don't have any fractal. Or actually, come to think of it, I do have one fractal over here. Right? Let's remove this. Let's just zoom this inside. We have a fractal over here. So we have 4 trend lines. Now this is the ideal way of plotting trend lines, and your confirmation comes when price starts breaking the trend line. A break of a trend line is the strongest indication of a change of trend. Let's take the next one as an example, just for practice sake. Right? We have this particular swing low, we have this swing high. price is expecting or price has moved down. When did price confirm? Where do I see a 0.3 over here? Let's take a major 0.3. I can take this as a major 0.3. So this becomes your bearish 1, 2, 3. You even have some minor points over here, swing highs which are lower, but I'm just taking the broad picture. So we have classified this as a 1, 2, 3 pattern. It's a bearish 1, 2, 3 pattern. What this 0.3 does is it has established this swing high, the pivot high over here. Once it's established the pivot high, if I need to plot my Fibonacci ratios, I will plot it from pivot to pivot, low to high. This is the best place to plot Fibonacci ratios, but we are concentrating on the trend lines. Let's start with the trend lines. Thumb rule number 1, left to right. Thumb rule number 2, plotted on swing points. So we start the trend line from the pivot low, connecting the fractals from left to right. This becomes a valid trend line. I cannot plot it on this fractal because it's going through the real body of a candle. So this is the most valid trend line. Do I have a second one? Yes, I can have a second one. This becomes your second trend line. Do I have a third one? Not really, because in between this swing high and this fractal, we do not have any other major fractal. So these are the two most valid trend lines. And as you can see, price does confirm the change of trend is confirmed by breaking the trend lines. Now, understanding to plot the trend lines correctly is very important, because as far as possible, keep things very, very simple. And plotting trend lines and establishing a change of trend by a break of trend line is the simplest thing that one can do. I hope this has really helped you understand a little more of price action. For further information, you can visit our website, London School of Financial Trading, where we organize workshops. We have an upcoming workshop in London in February 2013. We offer courses, personal mentorships. You can contact us for any other information. Well, thank you very much for being over here. If you have any questions, feel free to get back. You have the emails here on the website. We are always here to help. Thank you once again.